Global markets come into Thursday with the dollar modestly firmer as investors digest a largely inline U.S. inflation report and await producer price data later today. July headline CPI rose 3.4% year on year, matching expectations, while the relatively benign details reduced the urgency for another Federal Reserve rate increase. Markets now price roughly a 1 in 3 chance of a September hike, leaving upcoming inflation data and Chair Warsh's Jackson Hole message as the next major test for U.S. rates in the dollar. The euro is trying to hold up above 115, though the single currency is lacking a strong domestic catalyst. Sterling hasn't found much support after the UK economy expanded 0.4% in the second quarter, in line with forecasts, but June GDP surprised positively at 0.3%, driven by services and retail activity. Dollar yen remains focused on potentially retesting 160 as the wide rate differential continues to weigh on the yen, although intervention risk and elevated Japanese producer price inflation are limiting the upside. Aussie dollar has slipped despite the RBA retaining a tightening bias, while the New Zealand dollar is underperforming after a sharp fall in RBNZ inflation expectations reduced the probability of a September hike. U.S. equities have been more flat to mixed of late, but maintain a constructive underlying tone. In commodities, oil has pulled back a bit from recent recovery highs. Reports of additional Iranian asset releases by the UAE have provided some diplomatic hope, while a large build in U.S. crude inventories and weaker demand projections are offsetting persistent supply risks surrounding the Strait of Hormuz. Looking ahead, as already mentioned, attention turns to today's U.S. PPI report, with markets then focused on incoming inflation data, developments around Iran and the Strait of Hormuz, and Fed Chair Warsh's Jackson Hole address for clearer direction on the Fed's September decision. That's all for now.